Hi and welcome to the Market Alert for Monday, the 8th of February 2020. So the main news, I suppose, really is this, that the Senate Dems push through 1.9 trillion stimulus blueprint as Harris casts first tiebreaker. Democrats are moving to push through President Joe Biden's 1.9 trillion stimulus plan with or without, and most likely without, Republican support. It's incredible, isn't it? Here we go again. I mean, we had 1.4 trillion in between Christmas and New Year, and now we've got another 1.9 trillion. I mean, this madness ends at some point, I suppose. But at the moment, the printing presses are smoking. Incredible. It just renders me speechless, frankly. I just wonder how long this can continue. But, you know, I suppose when you're creating money out of, or currency, not money, currency out of fresh air, then this is achievable. And of course, if you can do that, you can then create that same currency to pay the interest on the debt as well, which is, of course, why they want to suppress the interest rates and keep them low and go negative. Simple as that. Because otherwise, their Ponzi scheme starts to fall apart. And the market's like this, the implied volatility down again on Friday. This is Friday's figure, 1620. Sorry, 1627. Thursday, 1628. Not down a lot, but that will be reflected after today's trading session, as this was announced late on Friday. And again, green on the implied volatility, which means we're free to move to the upside. Whilst I'm here, news for today. This is all we've got: industrial production and Centix investor confidence, whatever that is. Because they've changed this to low impact news items across the board, makes it very difficult to gauge whether the news is of importance or not. To be honest with you, I would imagine that this is the only news that the market is interested in, which has been reflected on the overnight markets, which we will see as the Dow puts in a new all-time high on the overnight market, going through the 89% on Friday. Retracement from this high to this low, and now just heading to all new high territory, which again is no surprise. This madness will continue until it doesn't continue. There's no point in trying to put an end date on it, but it has to end at some point. So again, we'll keep an eye on the implied volatility, because that's the only one that's really going to give us the heads up there. So in the German DAX as well, all-time high for this overnight. A bit of a struggle on Friday, which we'll see in just a moment. And then prices using the quiet overnight market to drive through. So all of these levels can now go because we're in, again, uncharted territory for the German DAX, a new all-time high. So all I need to do is to just have this, and if I can do so, I will draw this high here, which is the current all-time high of 14,190. So I'll be keeping an eye on this in the 2-minute chart, which we'll have a look at now. So overnight, you'll see prices have moved to the upside, and there you can see when this happened at around let's just work this out, because this is 2 hours ahead, isn't it? So around 10, well, when the market opened, really, it had a bit of a sideways move to start with, and then just after 10 p.m., 20 past 10 UK time, the market moved to the upside, straight off the DP, the 200 MA, and you can see the volume beforehand actually just starting to build there as markets tested the DP level, which is just hidden here behind Friday's close, and then bang, the market goes up. And interestingly enough, we had this very high selling volume here. It was absorption volume, obviously, because the market didn't break the low. It just held there at the 20-bar moving average, and then spiked to the upside, where it stayed. And the market at the moment just back to the 200 MA there, and that it was the line that I used on Friday for the 89% retracement. So that 1419, wasn't it? Let's just drag this across here so we can have a look. So there's the high. That's the new all-time high there. So I'll just use this horizontal line there just to see when the futures market opens. If it goes through this, then I know that we've already made another new all-time high. And then of course just above this we've got the R3, where generally the market will stop unless of course there's some really good news, and it will continue to drive. So through here, watch this level if prices do move to the upside, unless of course it's designed just to bring people in and then they'll bring it back down to Friday's high. But we'll have to wait and see when the futures market opens at 7 a.m, which is another half an hour away as I record this. So let's have a quick look at silver as well. This also moving up on Friday, came down to the 62% retracement as I spoke about, and it was the 5-minute chart that really gave the clue to this, wasn't it, on Thursday of last week, when we had all of this volume in this area just held at that $26. They had a shakeout, which I mentioned in Friday's market alerts, and then they just moved the market to the upside, and more so in the morning there. Then it came back to the DP once more, which you can see here at 26.31, and then since then prices moved to the upside and also spiked to the upside as well. And again, based upon this, if you're going to keep printing money, you're going to devalue the dollar. So we'll keep moving the metals prices to the upside. Again, we've still got this short squeeze going on in the background. The physical market is on fire, according to a lot of interviews that I saw over the weekend. I've had a bit of a pullback here where they've tried to sell the market back down to the 200 bar moving average and achieve this. Back down to $27 at the moment, so it's important to hold at this level. If not, we could see a retracement down to 26.35 or 26.50 is where it likes to do it in increments of 50 when it does retracements and moves to the upside as well. Okay, so that's a roundup of everything that we've seen on Friday and what we could expect today. I'm just going to run through Friday's trades, but for those that are interested. So if you finish at this point, thanks for joining me, and as ever, I'll see you in the next one. But if you're interested in a quick analysis of Friday's DAX trading, then stick around. So on Friday, we saw the market trading down to the high, and then you can see this holding for a moment or two before prices shake out to the downside, and then they bring this back, and you can see even they were getting ready to wind the market up in the last last few minutes before the cash market opened, send the markets to the upside. And then this bar here is gapped up on the open. You're probably wondering why this one actually turns orange, which I will do for you now. And that's because prices were gapped up on the open, and this sort of signal came, or type of activity came about from the pit trading days. And what would happen is that when we had set times and there was no overnight trading, if there was good news before the market opened, the futures market, prices would gap up. A lot of traders, novice traders, would buy, and then they'd just sink the market down, take out all of the stops, and then the market would settle, as you'll see here. You get another test to the downside in here. You get this test, and then you get them buying back with the same volume, now back above the BRN, and it's a case of we're now free to move the market to the upside there. So you can see prices sitting on that BRN, and then you get a big spike to the upside up to the 200 MA, and that's enough again to shake out everybody who's gone short. So as the shorts are selling, they then say, well, okay, look, we need to double check on this. So what we'll do is we'll bring the market back. But they do run into a bit of a problem here, as you'll see. There's a lot of support at this BRN. I'm just going to fast forward through this back to the 20 bar moving average, and then eventually we get through to the scalp, and at the 78% I decided to pull the trade because we've got this buying pressure volume here, tiny bar, and the market then finding support, which we see prices then reverse sharply, and not on this occasion fill. The market then drifts lower, making lower highs, back to another sell signal, but this time the support really kicks in, and again you can see that buying support there at the BRN, tiny bar, and then prices moving to the upside, and it becomes choppy. After this, you'll see prices trading sideways, and they'll come back down and retest before they can move higher. You can see the selling there, and then the buyback at the BRN, and then prices trade sideways. Let's just make sure that we've got no more selling at the BRN, and they pick up at this point, bring the market back above the 2 averages, and then move the market to the upside through the 200 MA. We've got some selling pressure here, but it's absorbed as the market then moves sideways. Just again, make sure, bring the market down to the 200 MA and then move it to the upside and up to the BRN. We go through the BRN and then we get selling here as well, which you can see very high volume in this up thrust. And then once more, we see the selling disappear. Prices move to the upside. We've had 2 buying bars, which you can see there, and then we get some more potential weakness, which is classic, because if you're moving the market up, then you need to drive it higher. But as you drive higher, people will take profits and other traders will sell into this, and that's what happened at the end of the morning session during Friday. So let's move on and have a look at the afternoon session, and as we do this, we'll also have a look at the non-farm payroll numbers, which came out as well. I'm just going to wind this back because I have got a screenshot for you of what these figures were. So here you can see that January payrolls miss, only 49k jobs added as unemployment rate tumbles to 6.3. So that being the case, the market didn't really like this. And you'll see prices moving to the downside in just a moment. Going back down to the high of Friday, it was choppy, but it managed to get down to the high. And then as we head into the afternoon session, we can see that this weakness continued. The market wasn't happy about this, and they've had to leave it till the overnight Sunday trading to get that new all-time high instead of on Friday. So prices trading down to the BRN there. They bounce off, they go back to the high, and here you'll see prices moving to the high, and then we've got some selling pressure in this bar as well, because again you can see that's just slightly higher than the previous bar, and actually I don't think that is, oh it is, just slightly, only slightly by a couple of ticks. Then prices struggle at the high. If you can't get through the high, then we've got to go to the downside, and you'll see them trying to buy back in as the market moved to the downside. Here you'll see some profit taking as they try to bring the market back, but as soon as prices close back below the 5-bar moving average, we then get a retest of the lows and down to the DP with some heavy selling there. But once we hit the DP, you'll see prices starting to build that sideways support, and again you can see the volume increasing here. It's all much the same as it holds at the DP level, closed back above the 5-bar moving average. The Dow then starts to move higher on the prospect of a stimulus package, even though we get close to some selling pressure here. It's just slightly lower than the previous bar, the range is narrower, and it's at a DP level. But it doesn't matter, because in the next bar we managed to hold above the DP, and then we just keep moving the market back to the upside there. Bit of potential weakness, but we're not done yet. We've got to get this back to the high, and we see prices move back to the high and close to the high, and one more shot at this, and again you can see that we don't make it back to the previous bar's high, and prices then trade sideways to lower and then move down in the between 4 and 4:30 as the cash market closes. So that's just a quick roundup of the activity and all of those points that we raised in Friday's market alert. All of the pivot points and other areas of support were highlighted, and that's where the market's traded to, and that's what we're seeing Currently here we've got the market sitting above the BRN, sitting at the 200 MA. Bit of volume coming in now to try and hold the market at this level. The high will be really important as well if they bring the market back down in the futures market and then send it back in the cash market as well. So it's this research and understanding what the possibilities are before the market opens. It's very important not just to turn up at 8 o'clock and start trading, but to know the background and where all of these pertinent levels are of support and resistance. Okay, that will do it for this one. If there is anything else to report, I will let you know. But the madness continues. The printing goes on. So let's see how things unfold over the next few days. As ever, thanks for watching. See you in the next one.